Olá, bem-vindos a mais um vídeo da ArrowPlus. Este, na verdade, é só um vídeo introdutório. Eu fui convidado há uns meses atrás para participar no podcast Crunch the Numbers, promovidos pela Lisbon Investment Academy, um grupo gerido por alunos universitários que me convidaram para o podcast para falar de imobiliário, vários temas do imobiliário. E eu acho que falar de informações valiosas que valeria a pena aqui replicar no nosso canal de YouTube. O podcast é inteiramente em inglês e, portanto, para aqueles que não percebem inglês ou não são tão proficientes no inglês, eventualmente tenham um bocadinho mais de dificuldade, mas podem ativar as legendas do YouTube à partida. Se por acaso não entenderem alguma parte, deixem nos comentários para eu poder desenvolver um bocadinho mais a ideia. Não só isso, como também digam-me aquilo que acham do podcast, do episódio todo. Se partilham ou não da minha opinião. Eu fui um bocadinho longe em algumas coisas e, portanto, achei que de facto era interessante replicar aqui no nosso YouTube. Deixem-me nos comentários o que acharam, divirtam-se e aproveitem o podcast. Um abraço.
Lisbon and Porto are now extremely overvalued. If you look at the intrinsic value of real estate in those cities, and if you look at the purchasing power of the inhabitants of those cities, but they are not overvalued, or they are, there's not enough term of their value compared to other big cities across Europe. So it's also very difficult to entertain the idea or to sustain the idea that those markets are overvalued to foreigners, because they are going to look at the real estate and say this is still cheap, or this is still within norms compared to our own real estate. And I think this is basically a way around to tell you that there's many variables at play right now. So we got to ask the question, is Lisbon expensive as opposed to what, really? If you compare Lisbon to Paris, it is still cheap. If you compare Lisbon to where I live...
Hello and welcome to another episode of Crunch the Numbers. Today we'll talk about real estate. What's the future for this area? And what should investors expect in the short term and medium term? Are people more likely to buy houses? And how does interest rates affect whether people buy houses or not? Is it the only factor to consider? Well, find out more as we dive into the world of finance. Okay. Hello, Artur. Welcome to another episode of Crunch the Numbers. I'm very pleased to have you here.
Thank you very much. It's an honor.
So we can start, and so that our listeners and viewers can get to know you a little better. Can you present yourself? So what sort of academic background and professional background do you have?
Yeah, so I'm not a typical investor. I was actually, for the majority of my time, in academia. I graduated in computer science engineering. Then I moved on to the University of Texas as a part of my master's, also in computer science. And then I've gotten a PhD in Germany on applied math. And around that time, I was talking to my colleagues there, and I realized that some of them were financially independent. Actually, there was this particular guy who was telling me that he was financially independent, and he didn't want to come to meetings and all that. And he said, tomorrow I'm not going to come. And I said, you're crazy, you're going to get fired. And he said, I don't have to come because I have an income that allows me to live off of it. So, one thing led to another. We were talking about real estate, and I realized that real estate was actually something that could provide me with financial independence. And sooner than I realized, I was into real estate. So I started to invest in real estate while I was in Germany, but I invested in Portugal. So I was basically managing all my investments from Germany. And then, I continued on doing academic work. I continued with my PhD, with a postdoc. Then I actually lectured at some universities after that, but real estate was my thing. I don't think this answered the full question, right? So you said introduce myself as far as academia and
professional. What's
professional background? Yeah. So then I also built a company. So I worked as a consultant, financial consultant in the market. I worked for Empiricus, which was a very large company in Portugal for financial publications around the stock market, all kinds of assets, and real estate. I was basically the head of the real estate publications. Then I also worked as a consultant for REITs, which is basically real estate investment trusts. They are called REITs, or they are pronounced REITs, but they are kind of similar to investment funds that are only dedicated to real estate. And I'm still doing that. But in the meantime, I actually built my own company, and my own company, which is called ArrowPlus, is basically focused on just passing on the message of my own story and my own experience, and just teaching people on real estate investing in Portugal, because our market is so unique and so peculiar. And I think that most people do not have the information. I had to start from scratch. I actually had no information when I started. And I realized that, lots of people out there could be creating opportunities in the real estate market, and they don't have the knowledge. So why not me? I've been doing this for 12 years now. So I wrote my own book. I built my own company. I was already doing consultancy for real estate, but like higher grade projects, firms and funds that wanted to really invest in Portugal and at scale. And I was basically providing them with my consultancy with a few partners. And then we had this company going, but I said, a lot of people out there are probably going to benefit from this, like not the higher grade investor or investment firm, but also the lower grade guy who wants to, has $20,000 and wants to invest. And then I wrote the book because there was nothing like it on the market in Portugal, that is. And we decided to, just launch tons of content on YouTube and start talking to people about real estate investing.
So I understand that the financial literature in Portugal is quite low when compared to other countries. And even within those that have some financial knowledge, most of what they hear is about Forex or cryptocurrencies or stocks in general. So can you tell me a little bit about the differences between stocks and real estate?
Well, I'll tell you about my own experience and vision off of it. And I don't think that many people can actually relate to my vision, because most likely, well, we have to frame all this because we also have a culture in our country that basically sees the stock market as a gamble, which is not true. Matter of fact, if you look to Northern European countries like Norway and Sweden, they see the stock market as a safer place to park their money, through retirement. And actually the word that we use to invest in the stock market in Portugal is to play, right? To play in the stock market. It's not to invest in the stock market. So I think it's also a very cultural thing that we have in Portugal, and we have to frame things under that perspective. At the same time, our real estate market is probably one of the best in the world to invest in, because we didn't approach the real estate solid, the role of my company. That's what we are trying to do. So there are not many investors. People do not.
Yeah.
I'm sorry.
I had a little bit of a problem with the internet. Yes. Can you repeat the answer to the last question, please?
From the beginning?
No. You were saying
just the second part. Okay.
Yeah.
So basically, I think that the Portuguese real estate market is really one of the best to invest in the world, because we do not have a solid, mature real estate investing market yet. And I think that most of the reason, or the biggest reason for that, is really there's lack of knowledge. That's the role of my company in all this. I think that most people do not know how to invest in real estate in our country. And so, I mean, you can see this very easily if you look at how realtors in our country actually behave. They are not prepared to talk to an investor. They are just prepared to talk to the end customer, the guy who wants to buy a house to live in. And this is bad in a way, and that's precisely why I built my company, and I want to share the word about real estate investing. But it's also good because, pragmatically speaking, it just provides us with a very good opportunity to invest. I'll give you an example of what I'm saying. It's just one out of many, but this example is really profound, and I think it just says the whole story. If you go to the States and you want to buy a house, you just type the address online, and you have an algorithm. I'm going to talk about Zillow in this particular case, for instance. You go to Zillow.com and you just plug in the address of the home that you want to buy, and it will provide you with an estimate of the worth of the home based on the homes that were sold around that particular house. So there's not enough opportunity for an investor to come in and say, I'll take the house like 50% off. That's never going to happen, because people know exactly what's the worth of a home. If you look at the car dealership market in our country, that's very, very solid. If you go online, if you have a car to sell, because for instance, you want to change your car, whatever, you go online, you type the model, you type the brand, the automaker, you type the year, and in a few seconds, you have the worth of the car. Of course, that it depends on the condition of the car and whatnot, but basically, what it boils down to is this very standard table of values for different cars. We don't have that in houses yet. And I think that this is a very big difference to the US, for instance. And I think that this creates a world of opportunity, because you can come and say, I want to buy this house. And despite it is worth, say, 150 grand, you can get it for 100, because there's not an algorithm saying to you that it is worth, or saying the seller actually, it is worth 150K. You see? So this is also this is actually a greater opportunity for investment than you can find in other countries where real estate investing is really, really solid. Of course, that on the other hand, we have the problem that our culture is also very specific and very peculiar, like I was saying. And we are not tailored to rent. We are not trained mentally to rent. We are trained to own. And you can real estate investors are probably going to be more successful if they sell homes to people who want to buy, instead of the rental market, which is actually where I specialize, because the market right now, as of now, is just greater. But I think that over time, this is also going to change. So we are in a very, very peculiar market. And if you combine both things, like first one, people are in Portugal, they are very familiar with real estate, because everyone wants to own a home rather than renting a home. And people want to, it's like the Portuguese dream, right? Everyone wants to have their own home. And then on the other hand, people see the stock market as a very, speculative type of game, rather than a safe investment. And I think that we have, all the ingredients to have good and solid real estate investing in Portugal. And I think that we actually need a much larger renting market than we have right now. Especially if we compare our country to, other countries in Europe and around the world where globalization inside the country is just higher. So yeah, I think that there's a lot of opportunity definitely, and we are tailored to invest in real estate actually without knowing it probably.
So you were talking about how in the US you can quickly get the value of a home, and in Portugal you can't. But the way you exemplified in getting that value was to compare to other homes in the area that with similar qualities that have sold at an X price. So, for instance, in college we learn a number of financial models to evaluate a firm's value. So through cash flow and whatnot. Are there similar values to analyze real estate, or is this just the example you've given?
No, there are similar models to appraise real estate. The first appraisal model, which is probably the most used one at scale, we have to differentiate real estate in terms of how large and how big the actual deal is. If we're talking about a small deal, like say 200K, you follow a specific model. If you're talking about a $20 million, 20 million euro deal, you're going to use a different model because it's just a different, I would say, a different playground compared to companies. But you have, I think that a fairly good model that I teach all my students in our courses at our company is the discounted cash flow model, which you can also use for companies, as you know. So that is pretty solid for most deals. It's also very complex for people who do not have a financial background to just come to see a deal. I'm going to appraise this home and then implement this discounted cash flow model. It's probably overly complex. Let's call it that. And but you can use that. So for instance, in the consultancy area of our company, when we're talking about, a deal of say 500 grand, we are going to implement the discounted cash flow model. The worst part about the discounted cash flow model in comparison to companies is that as opposed to companies, you have a hard time finding a discounted rate, which is easier on companies. In real estate, it is a little bit more complicated. And but if we're talking about a scale deal, $1 million, that's the model that you could use. If we're talking about a smaller deal, you could go with the comparison method, which I described earlier, right? The comparing the values of the surrounding homes. Or you can go through the yield method, which is basically, if the real estate property is basically rented out by, it just provides you with say 20 grand a year in cash flow. You can just divide that by say 10% or 0.1 in this case, and you get a 10% average yield model, and that will provide you with the value of that specific home, which in this case would be, of course, 200K. And for real estate, the problem with real estate is that there's this yield dilemma. For me, I wouldn't invest in real estate at less than 15%. Otherwise, I would just plug all the money. I would just pour all the money into the stock market because traditionally it gives us at least 10%. And real estate definitely has to have this premium because you have to manage the investment in a much more active and non-passive way than the stock market, than any stock investments. So I wouldn't personally invest in real estate for less than 15%. And but of course, that people talk in Portugal, the average yield is probably like 5%. That's the average yield of all investments in our country, which is just crazy to me. Just blows my mind out of the water. But yeah, you also have that model, so you can choose between the three models. Which one is best for you? I hope this was clear.
Mhm. And is the real estate an attractive market for new investors with less capital?
Well, the biggest advantage of real estate is that you can leverage. You can just go to the bank and say, "Here's an investment. Give me money," and basically build something out of something that you don't have. You're using other people's money. You can also do that in the stock market. It is just far more complex and probably not as readily as available as with real estate. So for people with less capital, I would probably say that real estate is the number one vehicle that could be used. And of course, it's really, that's another advantage of the Portuguese real estate market, because real estate is also very cheap compared to other countries, right? Even to Spain. So so I think it's quite natural for people with not a lot of capital to invest in real estate, as long as they are credit worthy. And to be credit worthy, you got to have, well, right now you gotta have a non just quickly translating this, a non-ending job contract. It's probably not the easiest thing to get right now. And then you also have to have, the LTV has to be good, the your monthly cash flow, of course, and all that. So if you don't have that right now in 2021, you're not credit worthy. If you're not credit worthy, real estate is probably not the best vehicle. But at the same time, the stock market, as of now, in my opinion, is also very overvalued. So it's probably not a good year to invest if you're starting. But yeah, if you have low capital, real estate is definitely a way to go, or a go-to, if you have access to leverage.
So you were talking about how the real estate market in Portugal is cheaper, especially when compared to other countries. Does that apply to Lisbon and Porto, or is that like the national context?
Well, Lisbon and Porto are now extremely overvalued. If you look at the intrinsic value of real estate in those cities, and if you look at the purchasing power of the inhabitants of those cities and around those cities, actually. But they are not overvalued, or they are, there's not enough term of their value compared to other big cities across Europe. So it's also very difficult to entertain the idea, or to sustain the idea that those markets are overvalued to foreigners, because they are going to look at the real estate and say, this is still cheap, or this is still within norms compared to our own real estate. And I think this is basically a way around to tell you that there's many variables at play right now. So we got to ask the question, is Lisbon expensive as opposed to what, really? If you compare Lisbon to Paris, it is still cheap. If you compare Lisbon to where I live, small town in Portugal, it is crazily expensive. But I still believe that you should compare the pricing of real estate with the intrinsic value of that real estate, which leads us to different models, and whether foreigners can now buy houses in Lisbon, say, in a way that they were certainly not doing 10 years ago. And that, of course, normalizes the prices. But you can also ask the question of whether Lisbon is overvalued, having as a reference the purchasing power of the people living in Lisbon. And if you look at newer construction of homes in Lisbon, it's just crazy in my mind that new apartments are sold for 10 grand per square meter. So it's like a regular condo of say 100 square meters is sold for $1 million. And I don't think that we are actually one of the poorest countries in Europe. We have to have that in mind. We are, which is the result of the politics that have been implemented in this country, but I'll not go there. We do not have an economy, in my opinion, that sustains that the middle class buys a new condo for $1 million. It just doesn't sound right. Even if we're talking about $250,000, it's probably still high. Our minimum wage is around 700 euros, right? I think it's 68,
Yeah,
I think.
that's sort of around that.
Something like that. The majority of those people, even if they earn an average salary of say $1,000 a month, they are not going to save up $1 million in their lifetime. So it just raises a very, very big red flag. And of course that this may sound normal to foreigners listening to us and saying, in my city, so if you look at California, for example, you have many, many cities in California where $1 million homes are just the average of the average. But this is not, I do not think that this is the reality for the intrinsic value of the Portuguese real estate market, of the Portuguese homes, and of Portuguese sellers. So in that particular sense, I would say that Lisbon is severely overvalued.
So, how much of that intrinsic value depends on the area the property is in?
Well, a lot of it, because right now, and the way that things have been playing out in Europe and in Portugal in the past decade, is that people in other countries, like I was saying before, just buy real estate and buy assets across Europe like they never did really. And these populations are basically interested in very specific parts of the country and very specific parts of the cities they want to invest in. So for instance, if you look at the main avenues in Lisbon, like Avenida da Liberdade, that is going to have a much preserved, persevered, and intrinsic value compared to other parts of Lisbon, because that's where foreign investors look at. And ultimately, I think that this boils down to one fact when it comes to valuing real estate. It is where other people or the main investors buy real estate that really preserves intrinsic value. And if foreigners and foreign investors, foreign investment firms and all that buy in Lisbon and they look for offices, they look for the best avenues, that's where the intrinsic value is going to be preserved long term. So if you compare different parts of Lisbon, you're going to have to get different possibilities of values.
And how do you think the Golden Visa program has affected the reality of the real estate market in Lisbon and Porto mainly?
Well, I also have a podcast, Michael. It's made in Portuguese, and I actually had the opportunity to have the previous economy minister in our podcast, and we were talking about that, and he said that at some point foreign transactions, and I actually disputed that idea, and I still do, accounted for at most 20% of all sales. I think that for a brief period of time it was more, but still, even if it is 20% of all transactions, that is still fine. But the real question is, what is the volume of those transactions? Because 20% of 100 transactions is 20 transactions, but if those 20 transactions are 1 million each and the other ones are 100 grand each, the 20% is going to be more relevant at the end of the day. And I think that what happened with Golden Visa was it was not speculation. It was, well, there was a little bit of speculation as well, but the biggest problem there was that we all of a sudden we had access to buyers across Asia that had huge purchasing power and came out and changed the market in very specific fragments of it. So for instance, they had to buy, I think it was €500,000 properties, right? At some point it was €1,000,000. And that did inflate the market very well, very much. Now, recently it has been talked about shutting down the program or slowing it down. People complained about it, but definitely overall, I don't have, like, I'm doing this from home, like I told you, I don't have the data here, but it definitely inflated the market in Lisbon and in Porto. Otherwise, it wouldn't be possible. If I'm pretty convinced of this. This is a bold statement, but I'm pretty convinced of it. It wouldn't be possible to double the pricing in Lisbon in as little as 3 years, 4 years, without having foreign buyers and foreign capital. And the golden visa was just the most prominent way of doing that. So at the end of the day, the golden visa contributed to just raising the prices like no other program in my opinion, and no other vehicle and type of investment.
And what do you think is the short-term and the medium-term future for real estate, especially considering the current low interest rates?
You mean in Portugal or worldwide?
Yes, in Portugal, since we're talking about the context in Portugal.
Right. So I think that the Portuguese market and the pricing of Lisbon and what we're talking about is really the reflection of a normalization of pricing across Europe and eventually across the world. Like I said, it wouldn't be feasible to have condos selling for $1 million average, even if it is new construction, in a country where people make €700 a month as a minimum wage. But we also have the problem that the average and the median wages are very close to the minimum one. So we are a very poor country right now. We don't have liberal politics in our economy, and this is going to get worse and worse. But on that note, we are still normalizing our pricing of real estate with other countries in Europe. And I think that the Portuguese market will just follow whatever happens in Europe. And I think that, so to answer your question specifically about, the interest rates and all that, I think that investments are still going to be made at a high rate until there's a big correction, and the big correction has to happen. I think that the interest rates are going to be low for a very long time now, because most countries and actually the European Union cannot afford to raise those taxes, those interest rates much, because a lot of we live in Europe is very, very different from the States in this particular economy aspect. So, for instance, the European Central Bank cannot just raise interest rates to benefit the economy as they want to, because we have various different countries in the European Union, and most of these countries have different types of debt. They have different types of interest rates indexed to their rates, to their debt levels. And for instance, if you look to the Southern European countries like Portugal, Italy, Greece, Spain, and France to a lesser extent, these countries cannot afford to have specifically. I think that Portugal is actually the most representative case of that, because Italy has this massive debt compared to their GDP, but most of it is domestic. whereas ours is not domestic, and that's a big problem. We are now approaching 130%, which is just crazy. And if the European Central Bank was to increase the rates, then most of these countries would just collapse because their debt would not be sustainable anymore. So rates are going to be low for a while, especially with the pandemic of the COVID, because I think that, just raising rates now would just put a lot of strain on a lot of companies and a lot of sectors, and that would be a massive correction. That would lead to a massive correction. So I think that interest rates, they are going to remain low for a while. And then, of course, just fosters the search for yield pattern, the search for real estate investments, and on the other hand, because interest rates being low is just one part of the equation. The other part of the equation is, are banks, still going to lend money? And I think that because of the COVID pandemic, that is still going to hold. So I think that we have the perfect ingredients for investments to be made throughout the period until there is a correction. My problem with this is that the correction may be higher than it should be, than it could be, and than it would be if there was no pandemic.
And if we consider, apart from the interest rates, from my understanding, I don't think there are many people buying houses at this moment. So I would say that the market is a little stable compared to 2019. But I do feel, in general, in the community, there's a greater sense of appreciation about the comfort in your home. So do you think, considering this, that people want better houses and are at more ease to buy houses in the near future? Do you think that the correction is to be soon, or that this will inflate the market even further?
Not really sure. I got the what are you meaning, but I can tell you upfront that the number of transactions is not lowering. In fact, it is increasing, and it has been increasing throughout 2020. We don't have the data for 2021 yet, but with the exception of May, which was the lockdown main, and I think it was from March through May. There was in fact a lower number of transactions, but after that it spiked. And I was just writing a report 2 days ago for our subscribers of reports on real estate in Portugal, and I was saying that I don't have the data here again. I hope to get this right off of my head, but I was just saying that Porto and Lisbon had different patterns as far as the appreciation of real estate, because like Lisbon just went really down, if I remember this correctly, throughout the lockdown, through May, I think, and then it normalized again, and Porto actually remained pretty stable across that period. But if you look at both, the real estate market grew by almost 5%. And the number of transactions, with the exception of the lockdown period, it did not go lower. And if you look to 2020, as opposed to 2019, 2020 had more transactions, because what happened was many people just put off the sale, they put off the transaction, the actual transaction throughout the lockdown, and then they got it after the lockdown, because after the lockdown you can see the number of transactions going up. So was your question based on the premise that transactions were going down?
Mainly, but more prominent on the assumption that demand would increase or would spike this year and the next year.
I don't think if demand is going to, I don't know. I don't, I really don't know. I don't think it is going to increase or to get lower because I don't know. What I know is that what ultimately regulates demand um, is really we're talking about it, the interest rates, the credit worthiness, or how likely the banks are to lend money, the access to capital and all that, and of course employment rate and all that. I don't know, and I don't think that there's one person knowing this right now. If next year or if this year, 2021, is going to be, there's going to be a higher demand for homes than the previous year. We have the perfect ingredients in place for, you know, real estate investments to be made, for people to buy new homes. And now that there's this paradigm where people want to buy homes with, you know, like bigger rooftops and bigger outdoor spaces, because they've seen the lockdown and they now want a space where they can go outside while in home. And the backyard has to be big and all that. And we also see these transactions, this transaction of people going from condos to detached homes. So it's also possible that a lot of people want to move up from a condo to a detached home. And that is going to create a transaction. So it's possible that the economy feeds these transactions. But I'm also worried that, in my view, there should be a correction anytime. And the reason it didn't happen in 2020 or it didn't happen within 2021 is really because everything is just masked by the quote unquote bazooka that the European Union announced, by all the layoffs, the benefits that the government provided, not only ours, but every single one across the world, including the States, which just poured loads and loads of money and incentives in the economy. And of course, that this just keeps going on and on. And as long as people can access capital and have a little bit of money, they are going to buy a new house, a greater house, a bigger house, a more modern house. So it has been always like that. And I don't think that this is going to change, because when it comes to a home where people want to live in, that's not a rational decision. That's an emotional one. And as long as people can do it, they will do it. That's why we have real estate bubbles. Otherwise, we wouldn't have them. And I think that, you know, until we see the point where the economy is going to correct, and that is only going to happen, you know, after all the benefits end and the companies really have to pay for the invoices that are being issued, I don't think that the paradigm is going to slow down or change, because people are going to buy, especially in our country where, like I was saying, the investor percentage is really, really low. If you compare the number of homes and the volume of transactions that are bought for investing purposes, that is minor compared to primary homes. So the primary home market is the primary home demand is going to drive the market. And as long as people have money or access to money, they are going to buy a new home. That's what defines the real estate market. It always has.
Okay, so we're nearing the end of our time. Like as a final remark, what sort of advices would you give to new investors?
Well, I'll give an advice that really is based on preventing errors and mistakes. The first one that I would give is educate yourselves. Think about it. you're in college right now, you're getting a bachelor's or a master's, I don't even know, sorry, but you're getting education to work on something to make money, in a job and to be a professional and to get a profession, so to speak. And you recognize that you have to educate yourself to do that. And on your job, perhaps you're going to make 25, if you work in Portugal, 25 grand a year, 30 grand, right? And then what surprises me the most is that people make investments and say 100K, 200K, whatever, a million euro investments without educating themselves. And that's just, it just doesn't fit my vision of the world. I don't know why people do that. It's so irrational. So the first advice that I can give to people is educate yourselves. Read my book or whatever book you find. It doesn't have to be mine. Just read as much as possible about real estate investing. Know what you're doing. Know that typically it requires renovating the places. It requires talking to contractors and developers, and leasing things out involves talking to the tenants and knowing about leasing contracts and all that. And people, I see so many people going into real estate investments without any clue of all this. So the first advice has to be educate yourselves, really, and spend a good time educating yourself, like you spend at university, educating yourself to do a job, to have a job for the next 40 years, right? So why not, if you look at real estate investing in the long term, which is going to be my second advice, you have to educate yourself. And if you do it for 40 years, even if you do it for 10 years, educating yourself really pays off. The second thing is look at the real estate market long term. If you're not looking to the real estate market with a minimum of, say, 10-year horizon, forget about it. Just forget about it. There's better vehicles out there. Just, look to the stock market, look at, other vehicles. I don't care. But the real estate market is really based on the long term. And if you don't want to look at it in the long term, if you don't have this long-term perspective, or if you're just trying to make a quick buck, just go anywhere else. The real estate market is not for you. And many people do not know this. They think that, I can do this for 5 years and get out of it. And they forget that real estate market is a relational market rather than a transactional market. So it's all about building up relationships and, with tenants, realtors, sellers, the banks. This doesn't happen in the stock market. You invest in companies you don't know anything about in terms of people, of course. You know the fundamentals of the company, you know all that, but you don't know the people working at the company, and you don't need to. It's a transactional market. The real estate market is a relational one. So if you're not looking to the real estate market in the long term, and if you're not educating yourself, I would say the real estate market, even though, it is just great and it just gave me the best life I can possibly imagine. I owe everything to real estate, really. It's not for you. If you're not following these two pieces of advice, then forget about it. That would be my personal advice based on my personal history. It doesn't have to be like this. You may have other people talking about real estate in your podcast, and they may tell you very different things, but this is my own experience and my own opinion based on what I lived in real estate.
Yeah, we at Liz have the same mentality. So if you are to invest seriously, you should look at the long-term perspective, or else the market is just a gamble, and that's not what we were looking for here. So
right, and I would just stress that in real estate, that is even more important than other vehicles. It was just my whole point.
Okay, so thank you so much for coming to. It has been really insightful. I'll leave your contact info below about the podcast and the website, so viewers can access your platform and get to know a little bit more about your work and about real estate investments in general. So thank you very much.
Thank you so much for having me. My cat also wants to say goodbye. Is actually my landlord, so he gets to do whatever he wants to. Okay, thank you very much, David. Have a great one. Bye-bye.